Hi, welcome to a midweek update. This is Kim Watson speaking for Ezeetrader. Okay, before I look at the markets themselves, I'm going to do a quick review. I just wanted to cover a subject which we've been discussing recently in the trading room. And it really all comes back to, are you missing out on your own, probably one of your own most reliable coaches of all, that being yourself. Quite often traders will be taking trades throughout the days, the weeks. Some may make a rough old note of them, but often very little is taken. If most are honest, they'll just take the trades and get on with it. There are obviously some that will be very pedantic in ensuring they take the trade, make the notes and everything else that goes with it. But are you missing out on that and not doing that? Now, when you've been trading for some years, the necessity of actually monitoring every single aspect about the trade reduces, and there's just some key levels that you may be looking at. But all the same, it doesn't matter how long in the tooth you are, it pays to be doing some analysis. And I do analysis on an end-of-day basis of the day's trades, and I'll look back over the week and see what's happening just to make sure I'm not missing trends. For example, one thing we were discussing in the room was stops. Are you finding, unless you do the analysis, and it takes 5 minutes, it takes less than that each day if you're trading 2 or 3 times a day, you just need to look at the trades. How often are you being stopped, for example? Are you being stopped out by like a 1 pip or 2 pips on a regular basis? If you are, it could be that you only need to adjust your stop positioning, what you're doing with them, by 1 or 2 pips, probably two pips, and try it. Now, of course, in the market could still come and get those 2 pips, the differential, but we have the same old often that in terms of people being stopped by a pip. Got stopped by a pip again, and it may be just positioning. Now, of course, the 2 pips may not make a significant difference, but sometimes I heard yesterday someone uses only 8 pip stops. Now, with the volatility of the markets in intraday trading, there are times when you can get away with an 8 pip stop, but in general, you're probably going to find yourself getting stopped quite regularly with an 8 pip stop. There are, as I say, there are times when it may be sufficient, but just the volatility and the spreads. If your spread was 2 pips of that, it only allows you a 6 pip amount of movement effectively. So really consideration in terms of what size stop you're using in that particular case. Now, I don't want to go into a whole argument about stops, but the thing is to ensure you're using something that's suitable for the market. And it may be, and this is the important thing of the coach, your self-coach, is have the dynamics changed. Are you trading a strategy that you've been doing, which has been working well, but all of a sudden the market's moved from, say, a market that's doing this sort of rising chop, and all of a sudden it's changed to a more rising trend, for example, like the Australian dollar. Do you need to be looking at how you trade it? Is other techniques that you know are going to be more suitable? Sometimes people don't really see the changes in the market unless obviously they come out a bit further, and this is why multi-time frame analysis is absolutely essential. But aside of that, they'll get stuck in, and it won't necessarily notice it's becoming choppy until it's become choppy. Now, the euro arguably has been choppy for quite a few days, and it's not really done too much more than continuing to be choppy, but it takes a few days before you realise, well, actually it's not really coming out of anything, and sometimes out of range. Sometimes you just need to come down to a 60-minute and look at what's actually happening. On this 60-minute chart, we can see for the last 4 days we're still in Friday's range, so we haven't moved out of the range of Friday. So you could say the market's relatively choppy. It doesn't say it's not tradable, but the conditions may have changed somewhat to where they were, if we just pull this back a while, when we were in these trend situations, when you may be in trading it slightly different. So it's really a case of awareness, and as I said, there's no better coach than yourself in some respects, because you can only cheat. You're not likely to cheat yourself, are you? I mean, if you cheat yourself, well, then you're cheating. But if you're talking to someone else, you may be wanting to not necessarily give all the facts. If you're talking to yourself, you've got to be perfectly honest in terms of what's happened, and look, yep, shouldn't have taken that, just jumped on that trade. Okay, that trade stop was too tight, or stop was hit by a pip. if you find a series of that, then in which case you need to look at what you're actually doing with your stops. It may, as I say, maybe the strategy. Hang on a minute, the market's gone really choppy. I haven't really picked up on that too much. I've been stopped out on that so many times, and it may be just your stops are getting hit because it is choppy. So you need to really look at what you're doing, what the market conditions are. So as I say, it's one of the best things you can do, and you may be missing out on it. Just make a quick recording of what you're trading. It doesn't have to be copious notes, but sufficient. It can be done in any format on the back of a fact packet, as long as you've got plenty of them. I wouldn't recommend that, but you do need to just keep some notes of why you're taking the trades, and it won't take long for you to actually gain from what you're actually recording. Okay, that's it. That's me off my high horse on my soapbox for this week. Let's have a look at the markets, and we'll start off with the euro dollar. As you can see, actually I'm not going to look at the 60-minute, but if you followed the market this morning, it did actually break this up to the upside there, but I'm not going to go into the obvious. Let's have a look at where we are. I'm just for a moment going to take the monthly pivots off here so it becomes a bit cleaner to look at. So we're just looking at the price action here. Now I drew these trend lines on here. This bottom one's been on for quite some time. We've got the top trend line, which I've drawn on here. Now we've broken through that this morning, but price has come back in this afternoon or late morning. It's pulled back into that region. Now you can't just be looking at obviously descending trend lines. We've got to be looking at horizontal support and resistance. And if you look here, we had some resistance around these numbers before. There certainly is selling coming in at these levels. I mean, we've just not managed to get through this sort of level very well, and it looks like even here we may end up closing below these levels. So there's this sort of selling region where the market isn't yet strong enough to get through it. I'm still looking at this picture. I'm still erring, that's the word, that we may see a correction to the downside yet. But I'm staying open in terms of what we're seeing here. But we really do need a break above these levels for me to be really thinking, yeah, we're going to go more bullish and for a longer period on the euro. So at the moment I'm remaining quite open. Someone asked today, what do you think of it? And it's really quite, I mean, it is quite 50-50 in the moment in terms of where it could go. There is that sort of a slight bearish urge though. Okay, even. Okay, let's have a look at cable. Now cable, sorry, I've been quite, we managed to get a long off almost the absolute low here, which is an unusual thing in the trading room. Some of the guys now have given it up. Last Friday on the huge move we had on Friday, it hit the target this week. It went through. But in terms of where we are now, actually, I need to bring the monthly pivot in there because that was the important point. It caught that yesterday. But the thing is, it's now sort of dithering around that area of the 34, etc. If we can continue on this route, and I mean, with this sort of surge we've had up here, maybe it does need a little retrace, but it's there is hope for this to possibly continue up here. But we are historically at reasonably high levels in this sort of term. A move below the 1.5 would probably suit the economy a bit better in some respects, but so long as it's up here, it's probably not non-inflationary effectively. But purely technically here, as I say, I think we could possibly see further upside. One thing we haven't yet done, and it will take a while to do, is we've got the low here. We made a new low, we made a lower high here, and so effectively in the bigger picture, you could there's an argument to say we've got lower highs, lower lows. We really are still erring a little bit towards the downside here, so we just got to watch this. Isn't it just a pivotal turning point in the market? And if it ended up like this, I would be erring possibly to the downside tomorrow, maybe after an early pop or something, but I may be looking more bearishly on this market. Okay, let's have a look at the dollar yen. Let's not look at the dollar yen, it's still in the box. Okay, Aussie dollar, sorry, there's just nothing for me to say about the dollar yen in terms of it sitting in a what seems to be a charmed area. Okay, so the Aussie dollar, I've left this main trend line. Let me just click on it to highlight it, and I'll just remove the monthly pivots for just a moment. So we've got this key trend line. Now we broke through it pulled back. Now we've put potentially, and I say potentially because it's not really confirmed until we break this high here. At the moment, we've got potentially a higher low sitting there. So there is the chance that this upward movement with the break of the trend, as I say, we broke the trend, pulled back within the trend, it's put a higher low in potentially, and it still looks like it's there may be some more upside. What we're effectively seeing to some extent is a dollar weakness, or have seen is a bit of dollar weakness. The commodity currencies have benefited slightly from this, with the Canadian dollar and the Australian dollar both seeing some positive upside, respectively. So at the moment it looks okay. However, today we've got this bit of an inside day occurring. But I'll be watching this tomorrow or at the end of the day to see how that turns into. If it ends up as the inside day, may need a bit of it's had a good run up. Maybe I'll just hold on a bit in terms of the pivots. Let's just bring the pivots back in there. It has run up to the monthly R1 now, so there's no reason it can't continue beyond that, but that yesterday's R1 may just hold it for a short while at least. Okay, I should say if it continues. I mean, one thing at the moment, yesterday it did actually close above that 50, so you've got to argue for the bullish side effectively on the euro. But as I say, if it ends up as a consolidated bar here, perhaps we may just get a bit of further consolidation before it breaks above that R1 again and continues maybe towards the 50 or 200 MAs. Right. That's it for me. I hope that all makes sense. And as I said, coaching, it's certainly by doing your own analysis of your trades, keeping a reasonable enough record. I'm in touch with reality, and I know traders in general like taking the trades, but don't always like taking the records. But the records will just help you, and just pick those trades which. It may be some trades you're taking that you realise, well, actually, 4 out of the 6 trades I've taken this week, or the 5 out of 8, or so, whatever it may be, have been really quite speculative trades, and I'm losing money. The trades that are not speculative will won. What do I need to do? All those sort of things come from that sort of questioning, but you won't do it unless you write it down and make a note of why you've taken the trade, etc. Okay, that's it for me. I hope you have a great week. Charlie will be back in the morning or tomorrow with some live trading, we hope. Take care. Bye for now.